Paul here. Today I'm going to make like the final video of this strategy that I've been talking about, which is the two sets of moving averages. Now I showed you how to do it on the hour, which is something I bet you can do it on the hour. Basically the hour is the best option really. If you want to make a like the decent amount and not have to wait a while. And then I showed you on the day where the formula to do it on the day, but you do it on the day, you're going to have to wait a while to see good results. But if you do wait on the day, you have to wait a while to see those results. So today I want to go over the same formula, but I want to do it on a smaller time frame. This is using the same strategy, but we're going to be using the 15-minute, and I'll show you how to use this two moving average combination to find moments on an intraday level. This is for those that want to make daily, intraday type income, small little amounts here and there. This strategy will work for that. But when you're focusing on like the 15-minute and smaller time frames, the risk of you entering like consolidation zones and things like that are more. So you just got to be cautious of that. You got to be more cautious on what the market's doing when you're looking at it on a 15-minute. But anyway, I'm going to show you how to set it up and what to look for. We're going to briefly have to look at a longer time frame, but after that we can go down to a 15-minute. Basically, what you have to understand is what the overall trend is doing, and we're going to be looking at SPY. You can do this whatever stock you want, but the focus right now is SPY. So you have to understand what the overall direction is, and then you can move to a smaller time frame. So I'm going to show you how to set everything up, what to look for, and how to set it up for an intraday based style of trading. Okay, so to set it up, you're going to need to set up your two sets of moving averages, which is the 20-25 and the 90-95. Now, for the 90-95, I use Ghost Market Pro, but for anybody watching this video, it will take about 4 indicators just to set up the two sets of moving averages if you guys don't want Ghost Market Pro. And then the other one here is the difference of two moving averages. So real quickly, we're going to set up the two sets of two moving averages here. So if you want to get it for yourself, you have to go to your indicators and you have to go to CM EMA trend bars, and you're going to be putting 90 and 95. That'll set it up like you see right here with the two bottom ones. They're more thick, and it basically shows you the major support level of the asset. And the next one here is you want to go to 3 smooth moving averages, and you want to change your settings here to 20-25, and you can check off the third one here because you don't need it. You just need 20-25. That'll set you up with the two sets of two moving averages. The next thing you need is the difference of two moving averages. So you got the difference of two moving averages, and with that one, you're going to be changing your settings to 13 and 24. So if all that's set up, basically what you want to do is, real quickly, you want to go and you want to get a good idea of what the overall trend is doing. In this case, we're looking at SPY. So we can look at this on the daily and see that this is in an uptrend. And it's usually in an uptrend. So if you go back and look at the last time it's crossed, last time it was crossed was right here, which was on November 6th. So since November 6th, it has been in an uptrend, basically. You can go look at this on an hour if you want to be more specific. Well, actually, that is the, we're on the hour chart right now. So on the hour chart, it's in an uptrend, and we can also look at this on the daily. If we look at it on the daily, we can tell that this has also been in an uptrend. So the daily is an uptrend, and the hour is an uptrend. So we can see the hour is an uptrend because of the last time it has crossed, and the day is an uptrend. So since we know what the overall direction is doing, that's the direction you want to focus on. So now that we know the overall direction, what we want to do is trade SPY on an intraday level. So we're going to go to a 15-minute. Now what you want to focus on here is you want to focus on when the 20-25 is crossing the 90-95. So that's pretty much the moment you would enter your trade. if you want to do this on a smaller time frame. So we can look at some moments. Now, keep in mind you may hit some consolidation zones. So you want to get in on the moments when the 2025 for a call. You want to be focused on when the 2025 is crossing up through the 90.95, and for a, well, you know, if you're in an uptrend, you want to focus on the 2025 crossing up. But if you are in a bear market, if this is bearish, if the overall trend is going down, you want to focus on the 2025 crossing down from the 90.95. So basically what we want to do is, since we know that the direction's going up, that's the direction we want to be focusing on an intraday level. So basically, you want to get in when the 20 and the 25 is crossing the 90.95. You also want to check out your EMA difference. It will also tell you, as it's crossing, you can also look at your difference of two moving averages. And it basically, if the difference of two moving averages, if it appears above the zero line, then that's also a good moment to get in a trade. So we can look at a couple moments. We see right here that it's about to cross. It crosses right here, but we also see it going above the zero line, which means we could get in our trade right about here, and we could ride this out for a couple hours. And in 3 hours here, you would have made $368. So that's that move right there. So next, we got to find the next moment where it's going to cross up. So we see another crossing moment right here. The 2025 is crossing the 90.95. So you see a moment. You see it because you see the difference of two moving averages. You see it go above the zero line to right about here. So you could enter here. You can enter at the cross, or you could enter right about here. So if you enter here and we rode this out, rode out all the way up to here, this is about 2 days, you would have made $813. If you rode out for a day, let's see, yeah, about a day right here, this is about $727. So let's look at another. Now, since we know the trend is going up, you can focus on the zero line here, and you can focus on when it's going above the zero line. So there's two ways to enter your trade here. It's through the 2025 crossing the 90.95, or it's when the bars down here with the EMA difference are going above the zero line. Now just keep in mind, if you enter that, you might enter a chance of consolidation and things like that on smaller time frames. So for people trying to get in and out of trades quickly, like we got an example right here. We see it going above the zero line right here, so this would be a good trade right here. You could ride this out briefly for a couple hours, right about here to here, and in 3 hours this is about $400. You see another brief moment right here, even though it's going down. Right about here, this is very brief, right here on this candle. This is only for a short time. This is very brief, but this is $182 for 45 minutes. Now we see it happen again here. We see it go above the zero line right here. Right here we see this, so you can ride this one out. And this one is about $253 in about 3 hours. So you get the general idea. You'll enter. The two areas of entering is when the 2025 is crossing the 90.95, or when you see it down below the zero line and it's crossing up on the zero line. That's also another moment of getting in. So like if you came in here at this moment, from here to here, right here to here, with this small trade right here, 3 hours would have taken $500. So this is more for intraday level. Now real quickly, I want to show you what to do on a bearish scenario. Now we know what I'm trading right now. What I'm showing you is a bullish scenario, but in the case of it being in a bearish situation, you would basically be doing the same thing. you would be looking for, you would have to check on the longer time frame to see if that you are entering into a bearish moment. And then if you are, you're basically going to be doing the same thing. You want to look for the 2025 crossing down. You want to look for the 2025 crossing down, or going from where the bars on the up here are, you know, going below the zero line. So you got a couple scenarios here. Even though with SPY, the overall trend's going up, I want to show you a couple times to enter trade on a bearish situation. So right here, if you wrote this out for a put, this would be, this is a 21 hours and about $12 difference in price. This is $1,236 for one contract. So let's just see if there's another bearish scenario. Now, with it overall going up, it's kind of hard to find bearish scenarios, but they do happen. You see it happen again right here. The 2025 crosses down to the 90.95. You also see the EMA difference here. It's going below the zero line, so you know this is a good trade to take. So if you came in right about here, you wrote it down. It's about $643 in about 5 hours. So you guys get the general idea. You basically have to identify the overall trend. In this case, the S&P 500 is going up. And once you've identified the trend, you focus on that on a smaller time frame. Now, if it's going up, you want to focus on the 2025 crossing through the 90.95. If it's going down, you want to focus on the 2025 crossing down from the 90.95, and then you want to use your EMA difference here to find moments. For the situation of it going up, you want to look for it going above the zero line. For situation on it being bearish, you want to focus on it going from the top down below the zero line. So that's kind of how you do this on an intraday level. Now, there are advantages and disadvantages to each one of these strategies. The day chart will probably bring in you the most out of it, but you do have to wait a while to find those signals. The hour chart is my preferred method to look at. You can usually find those signals pretty often. When you're doing it on the 15-minute, you have to identify the overall trend, and then you have to find moments where it's entering into the 90.95, and also looking at your difference of two moving averages as well. It's all up to you guys which strategy you want. I gave you 3 scenarios. I gave you 3 time frames. This strategy works well for all 3. It's just personal preference on which one you guys want to use. But I basically wanted to show you which. There's a scenario which you can use all 3 of these. You can do it on the day, you can do it on the hour, or you can do it on an intraday level. So I showed you those in all these videos with this strategy. So whichever time frame you guys want to do, you can do. It works for all 3, but I find it works the best on the longer time frames. To me, it's worth it to wait longer to get better results than to get, you know, intraday, more of an intraday income. But, you know, if you want to make money on an intraday level, then this strategy might be for you. But anyway, if you guys like this video, make sure you check out my Discord. It's for free right now. Other than that, if you like this video, if you like the strategy, hit the like button, hit the subscribe button, and I'll see you guys in future videos.